Hey guys, this is the Mysterious Investor, and today we're gonna talk again about Old Dominion Freight Line, ticker symbol ODFL, which continues to be, in my opinion, one of the best companies to invest for the long run. I personally invested in this stock in 2019 when it was trading at $122 a share. Today the stock trades at $324, so as you can see, I have already almost tripled my money in this stock in the last 2 years. And here's the proof directly from my home broker, so you can be sure that I'm telling the truth. I also own some other great stocks that have outperformed the market in the past years, so let me know in the comments if you would like me to talk about them. And I also made a video with the complete analysis of Old Dominion in May 2021 when the stock price was at around $263. I'm gonna leave the link here in case you wanna check it out. And since then, the stock has done nothing but continue to go to the moon. It went from $263 to $324, a 23% increase in just 5 months. If you didn't buy the stock that time, don't blame me. Okay, I did my part. If you want to hold the stock, it's up to you to buy it. Here's some highlights from the latest quarter results. Revenue increased, okay, are you prepared for this? Revenue increased 47% and diluted EPS increased 84.8%. And that's a company that trades at a 33 forward price to earnings ratio. That's a bargain, okay? This stock is a bargain. And I think you should be aware that the company has just released an update for the third quarter of 2021, revealing that revenue per day has increased 29% as compared to August 2020 due to a 10.9% increase in LTL tons per day. So guys, they are still growing like crazy, and I think you're missing out on a very good opportunity if you still don't have this stock. So first, let's go again through the company because no one talks about this stock besides me. Although it is one of the best stocks you can find in the stock market, they are a trucking company that was founded in 1934, operating with a single truck running between Richmond and Norfolk. Since then, they have acquired several competing trucking lines and became a national less-than-truckload freight leader and also a global transportation company. They went public in 1991. By then, you could have bought a company share for a little more than $1, and today that single share would be worth $324. They offered regional, interregional, and national less-than-truckload service, operating in the following channels: domestic, which is meant for national less-than-truckload operations; expedited, intended for time-sensitive shipments; global, especially in Mexico and Puerto Rico; and some other services like technology. They have more than 22,000 employees, over 47,000 tractors and trailers, and operate in 248 service centers in 48 American states. The company claims to be the best positioned LTL carrier, with history of significant revenue growth and profitability, ongoing opportunity to win market share, superior customer service, capacity to grow, experienced and motivated team, and commitment to deliver superior long-term shareholder return. As we can see in this chart, over time the company has been able to gain significant market share in all US major markets, like they did for example in the Pacific Northwest region, with a 13.3 market share increase just in 2021. Since 2002, they have had a compound annual growth rate of 11.5% in revenue, and their net income has done nothing but gone up. Old Dominion has an unmatched 99% of on-time deliveries, which is quite amazing if you consider the logistic headwinds imposed by less-than-truckload shipping, historical declining cargo claims as a percentage of revenue under 0.3 in 2020. They still haven't revealed numbers for 2021, and they have very little customer concentration, as we can see right here, which is something you want to see in a company you own. You don't want to depend too much on only a handful of customers. Only 4.7% of the revenue comes from their largest customer, and the top 20 customers account for less than 30% of revenue, which is really great. Their balance sheet is really strong with very little debt and return on invested capital of around 21%. They are a medium cap company with a market cap of $37.2 billion. They trade at a price to earnings ratio of 44 and a forward price to earnings ratio of 33, which I think is not really that much for a company that has been growing like crazy. And they are expected to have grown their revenue 9.6% by the end of 2021. They have a gross margin of 33% and have been profitable for a very long time with an incredible 18.8% net margin. Here is some of the financial highlights. Revenue is up since 2016, same as operating income and EPS, which has almost tripled in the past 5 years from $2 to almost $6 per share. And they are not quite done yet. Here we can see that they are still investing heavily into the future, which makes them a great growth company to invest in. So in my opinion, this company is still a great buy opportunity. What do you think about this stock? Do you already own it? Please let me know your thoughts in the comment section below. I hope you guys enjoyed this video. Please don't forget to smash the like button and subscribe to the channel for videos of some of the greatest companies to invest. See you next time.